Whoa, 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 whoa. I got a Friday feeling, Matt. It's a beautiful
I got a
Friday feeling.
feeling this market's gonna close red for the month and the week.
You know, Matt, I was trying to learn Hello Darkness, my old friend, so I could change the lyrics to Hello Doji, my old friend. But the way the stock market is acting, it's not even going to put in a Doji candle if they keep shitting on them here. I mean, the Doji, it needs to close the month for sort of where it opened the month after making a new high for the move.
Yeah.
And right now, we've gotten a little bit too red for it to be an actual good Doji hammer.
Yeah, we've gotten too red, but it's also half day. And usually when we get red this time of day on a Friday, we tend to accelerate. So all you BTFD mofos out there, be careful. I don't think this is a BTFD moment quite yet.
Is that by the fucking dip? Is that what that is?
It is. It is.
Right on.
Yep.
Hey, welcome to the show, Market Vitals, marketvitals.io. Please spread the wealth, share the story, retweet. If you're watching on Twitter, retweet this, right? And you can actually quote retweet it. Hashtag that shit. Hashtag marketvitals.io. Hashtag mind the mo. Hashtag play the value. I don't know, Matt, give me another hashtag.
Hashtag my ass.
That's a big hashtag. I'm not sure there's enough characters for that.
True. Fair enough.
All right, Matt. Let's talk pop culture here. Your Michigan alum, Tom Brady, in his 10th Super Bowl and a giant better placing. $2.3 million wager on underdog. And let's just be clear here. $2.3 million wager on Tom Brady.
And Bruce Arian and, the coaching staff of the Tampa Bay Bucks and their stacked defense and their stacked.
You know what? Me and you have argued about this, and that Tom Brady has been blessed with outstanding defenses for most of his tenure.
Yeah.
I mean, that's just a fact. And this Tampa Bay defense, oh my God, are they?
It's legit.
Legit as can be. Our friend Dave Ross Sports.
Too legit to quit.
Say that again.
Too legit to quit. Don't you remember that was like
you're not good at sign language or hood talk. Put the hoodie up if you're going to do that.
Too legit to quit.
Give me a hoodie up and do it. There you go. Belichick. Anyway, Dave Ross Sports, he was pointing out the linebacker core for the Bucks and how insanely awesome they are. And being a Chicago Bear fan with a long tradition of incredible linebacking going on, I mean, I completely appreciate that, Matthew.
Mm-hmm.
Anyway, I don't think I need to know who you like, but who do you like?
Yeah, I mean, I think it's hard. Mahomes has got the youthful swagger, and I love the matchup. I mean, everybody should love this matchup. I love how confident and he freaking backs it up every time he plays. So, I mean, he gets to play the GOAT, and if he gets to beat him, I mean, he starts at his young age, he starts challenging, the throne, so to speak. And I like that. I like the idea of all records are made to be broke. So yeah, Brady's the GOAT today. Maybe Mahomes is the GOAT tomorrow. And I think that's exciting for mankind.
For sure, dude. And we've talked about before, some of the commercials of this young gentleman's work ethic. Let's fucking bring back this age of exceptionalism. It's amazing to Matt because the general public gravitates towards exceptionalism so much in sports, seems to me.
Yeah.
And sometimes I think in other places, particularly politicians, there's no expectation that somebody could be an exceptional politician. I don't know. That gives me a segue here to the exceptionalness of Biden's ability to write with his pen. And in fact, that all he has to do is sign. That's all he has to do. And getting some pushback here. This I saw several other governors pushing back, and we talked about this. Like, at what point? What if he does 400 executive orders? Like, at one point, is the constitutional process of our government challenged by the exorbitant use of the executive order. And what is the modus operandi for challenging it? So here, Greg Abbott signed an executive order directing all state agencies to sue the Biden administration for any federal actions that threaten the Lone Star State's energy sector. Of course, the energy component of this is most forefront. Most people are being hurt.
As they should. I mean, the jobs that are destroyed, the livelihoods that are destroyed, the taxpayer base that is destroyed from moves like this. You know, this is like legitimate. It should not be discounted. It should not be discounted at all.
Yeah,
and,
you know,
if I'm a state AG, I'm getting on this too, because this is hurting our state. This is hurting our taxpayer base. And again, you know, Texas is a pretty free state. They don't have state income tax. You know, they get their taxes in other areas, obviously, but they're all about kind of offering people the opportunity to use the legal resources they can, which in this case, they happen to live in an oil rich area. So, you know, why is it any different than Saudi? I mean, again, I don't get it. Again, the climate stuff, throw it out, because we live in a much cleaner place today than we did 5, 10, 20, 30 years ago. We've already discussed that too. So, you know, you're talking about livelihoods, and you're talking about lives being destroyed with these types of executive orders. And to your point, how many people finally are like, screw this, you know, we can be a state on our own. The federal government's not going to help Texas when all those people are out of jobs. They've already expired all their jobless benefits from the last year and a half. And these poor people can't find jobs already. And now you want to get rid of another industry and add to the, you know, fuel to the fire, so to speak. I mean, it's just insane to me. Again, this is the guy you voted for, people. Texas did not vote for him, but here in our state,
it was close. It was closer than I thought it was going to be.
Yeah.
It's just interesting too, because as not a constitutional scholar, this is interesting, because he's blown the doors off of the pace at which he's doing these executive orders. And at some you know, it's like we created the union explicitly at the very beginning, because we didn't want some schmuck at the top dictating to everybody.
Right.
You know, he is not King Biden. And so, and believe me, they've had this discussion about every single president and the ability to do executive orders, and where's you know, we have checks and balances. Where's the balance on executive orders?
The media, you know, again, Trump definitely wrote a few more executive orders, you know, than some, and not as many as others. So, but anytime he wrote one, you definitely got pushback, as you said, from the mainstream media. Nobody barely even covers the actual signing of the executive orders, because it would be outrageous if here's the other 14 that he did today. They don't have enough time, I guess, in their reel to, you know, get it done.
All right, Matt, listen, let's just give a little bit of time to the ongoing story of the Civil War as far as retail versus Wall Street. I loved this one, Matt. You shared it with me, and then I found another Reddit or another post of it from Reddit investors. And it says, we can remain retarded for longer than they can stay solvent. I thought that was awesome. We've said this before plenty of times on Market Vitals, right? The market can stay illogical a lot longer than you can stay solvent. But this, you know, the hodler mentality, the herd mentality, very interesting dynamic that has ensued. And I will say it, and you can expound upon how they are part of this story, but for sure the bigger part of the story is giant whales and sharks in the water fighting other giant whales that are shorts.
Whoa. Listen, short squeezes have happened since the advent of free markets. And this is nothing but a short squeeze. Again, I'm not the type of short that shorts to zero anyways. I never have been. When I ran a short fund, I was looking to get, you know, the meaty substance of it. And a, you know, meaty short trade is 10% to 50, 60% in my book. I'm never looking to short to zero. There are people that do that. I think that's a silly game, quite honestly. It's one that, you know, why are you playing it? I'd much rather take the don't come on that, which is I want to bet against or bet for this event which is what Talib does, right? Nassim Talib in Black Swan, he's like, listen, I'll buy cheap calls all day. I'll buy nickels and throw them away all day because all I need is 1 out of 100 of those nickels to pay for for every trade I take. So this is what's happening right now is there is absolutely an attack on the shittiest companies that you can imagine. Most of them are retailers, AMC, GME, dead retailers walking. Today you had, Siebert, Muriel Siebert. You remember her? She used to come on CNBC in the late 90s, early 2000s. And she's got she has a brokerage and she wants you to not use them, but use, Siebert Financial Services, right? I didn't even know this company still existed. Well, today this stock went from, we can talk about it, but it went from 2 to 26 overnight. And it's just like, oh my God.
The squeak. I saw this tweet and I nearly hit the ground laughing so hard because we've seen lots of memes about trying to explain what's going on. And some of them just, I love the one you shared of the girl talking, the gal talking about short stops and hedges around her house. But this one, I got to read it. And this was Elon Musk was tweeting about short sellers and how they fuck short sellers. And this is, whatever. And he has a fair share of history fighting short sellers with Tesla. He's won the game.
Yeah.
But anyway, I love this. Okay, cool. That doesn't change the fact that there are 48 million kangaroos in Australia and 3,457,380 inhabitants of Uruguay. So if the kangaroos decide to invade Uruguay, every Uruguayan has to fight 14 kangaroos. I mean, it's just I'm like, you won Twitter. Luminous, you won Twitter because exactly. Oh my God. And then the last one that I loved was, is billionaire Steve Cohen headed to federal pound me in the ass prison?
Well, I mean, shit, Davey Portnoy was out there literally calling for these guys to go to prison yesterday. And I'm like, well, dude, you were out there pumping shit too. And I'd be careful. You're out there pumping your day trader global bullshit, also. And like we talked about this before, like what happened to that, what happened to that effort? Well, he must've got, like you said, a letter in the mail or something because, that stopped too. And, listen, there's just as, you can make this argument for this. You can make the same argument for these assholes that are trying to squeeze these stocks. And it's not just small people, right?
Well, not only that, Matt, I was talking.
Is it any different to, basically do a reverse attack on a company that's on its way to zero? And again, these companies that kind of hang around at $2 and whatever, and they don't trade, and then all of a sudden they get squeezed. I mean, maybe that's a function, maybe that's a systemic issue that if you can't meet a certain volume of trade, if you average 1 to 3,000 shares a day, like why are you even listed? Maybe they should just delist those things and take them private.
Right.
For God's sake, I don't know.
Yeah. And back to the other point, like isn't there any culpability for Reddit and this group when they tell people to put all of their bet on a short dated option,
right,
on something? And there's been plenty of these story threads of people losing all of their money on these short dated option, put all of the money on this trade, the 2-week call option on X. That's trading advice. This is not trading advice, by the way, this show. Let's be very clear.
No,
we talk about markets.
We talk about the risk involved in trading.
Anyway, Matt, let's talk about some real price discovery. And why don't you lead us off? Because, the funny money and GameStop with the market cap of share it with us, but versus something that's happening on real companies like Apple and places.
Yeah. First, I want to start with the DOGEUSD Coin, Bob, because I just got to, since this is the flavor, one of the flavors du jour of how just jump up, buy, right? Again, this thing, had its, when you and I were having a pizza last night, we were talking about, I was telling you how my son and all his buddies are getting rich. I'm like, I finally asked him, like, how much money are you putting into it? Oh, I only put $5. So he turns his 5 into 25. I'm like, well, you just paid for your pizza. Enjoy it, right? And, but
take the fucking money.
Take the money. But the problem is, Bob, we hit, 7.5 cents and we got cut in half already. Went right back to 3.5. Folks, simple math. If you put in $100 or $5, it's worth 250 here, or 50. You've lost half your money, and it's still not back to the price. So be careful. Understand,
especially Matt, especially this one, which from all the due diligence that I've read, incredibly and crazy. Is it the new pet rock? Is it going to be a crypto coin that actually becomes a form of money? It seems fairly unlikely that it becomes the next Bitcoin.
And
but
again, this
on the pet rock side of it, it broke the record on Twitter for the most mentions in a I don't know if it was a 24-hour period or what. It's the next pet rock thing, man. And
well, again, it's up 300% in the past month. It's up 1,200% in the last 3 months. 14, et cetera, 700% in the last year. Again, it's mania that's going on in the trading world. This won't last forever. But let's get to the real story.
Let's talk about some real assets.
Let's talk about some real stocks today that are really getting hit. And I'm going to show the daily charts first, because Apple, we have not seen a move like this in a while, Bob, and really since back here in September, where we, kind of peaked again there, and we went from 138. We fell almost 40%, by the way, when that happened. So a similar move would take us back to probably around 100. And I would, again, just looking at the price action here, you got some support here at 115. That's pretty light. And then again, all the way back here, still to 70. Even though we held at 100 last time, there's a hole here that needs to be filled in. That gap, that runaway gap that we saw in the summer, still hasn't been filled. These things always get filled. We know. Again, it's just a matter of when, not if. And so I think that's something to be looked at. 145 down here to 131. That's a 10% haircut. How come nobody's talking about that on Reddit? Where's all the Apple fanboys, crying in their milk? What do I do? I bought it at these higher prices. So I
thought they were going to come out with a watch that would actually teleport me.
Right.
Yeah.
Yeah. So I think I'm locked up here a little bit, Bob. So you may have to, I don't even know if I can, hold on a second. There we go. Sometimes it locks up. You okay?
Dude, I'm better than okay.
Okay.
But,
And then the other one, pop up Facebook there real quick. Facebook is kind of doing the same thing here. I'll try to do it. Hang on one second with me. Facebook's getting hit kind of in the same, again, their earnings came out. We talked about this. And here's the scary thing. This, again, is a daily chart on Facebook. The last 3 days, huge moves. Remember, we talked about how it had already broken down before earnings, broken out of this triangle. It did it again, and it broke again before the earnings, came back into it, ran up to right to the apex. I mean, this is just a perfect triangle play here. And we came right up into here, and we talked about this before the earnings. I think you should sell this stock into the earnings if you own it. You got the bounce that you look for, 244 to 280, and bam, it's right back here to 255 today, down $10. Again, 3.7%. That's a big move. Google also down 2% today. Again, it's right above the breakout line that we've talked about. If it closes under this 1815 level, this will be the first day that it's back into this bracket that it broke out of,
right,
and it has not been able to hold too long. So again, these throw over breakouts, you got to be careful. If they come back into this, it basically eliminates the breakout. Okay, so you shouldn't be buying this for a breakout if it comes back into here. Matter of fact, I'd wait for it to break down under 1709. And
you froze again, Matt. Did we lose you? He gone.
It's short again. And the SPOOs today are as I sit here and I'm locked up again, 36.91, 36.92, not looking too strong. That's a new low for the last 5 days, and it's looking a little shaky out there.
All right, let me Bob, share, Matt. Hold on a second.
Please.
There we go.
And the SPOOs, again, trading 36.90. There's some support back at the 36.65 level that I could see us trading to today. So watch out, 36.65 again. And then below that, again, we've talked about this. We were talking about a monthly chart before, Bob. And I think, 34, 3,300 is still not, it's kind of the moving average on a monthly chart. It's so crazy how far out and how bullish, the SPOOs have been for so long on the monthly chart. Really crazy.
Matt, we had a reach out from inside our community at marketvitals.io asking for book recommendations, and these all come from you. And Matt, we had a talk last night at dinner, and you're like, well, which market books have you read? And there was a lot of silence going on, and I'm like, I've never read a single book.
I've read them all.
Matt
I've read them all, and there's a lot of junk. And I really, what I tried to break it down to here is one or two technical books, which I think Jeff Cooper is the king, and you can find Jeff Cooper. He's still out there trading. He works for T3 Trading. You can follow him on Twitter. Just look for Jeff Cooper T3 Live, I think, and he's got subscription services and whatnot. But his books, to me, they're hardcover academic type books. Hit and Run Trading 1 and 2 are fantastic. You get those two, that'll teach you pretty much all you need about technical analysis. Again, I'm not a true technical, analysis trader. I trade price and I trade volume. Those are pieces of technical analysis, but I'm not a chart guy. I'm not looking at dojis and those things. But if you want an understanding of all those things, Jeff goes through all those in his Hit and Run Trading books. Momentum wise, which is what you like, Bob, the Way of the Turtle. The Turtles are known, out of Chicago as, who were the two guys? I'm drawing a blank. Basically they made a bet. I can, that we can teach somebody how to trade, right? One guy said yes, the other guy said no. Richard Dennis, I believe, was one of the guys.
Yes.
And, and so they did this test and they were successful. And they basically taught them, kind of momentum methods like you like to use. The Way of the Turtle is Curtis Faith's book. He's one of the turtles. And, he had some success and he's had some, I've interviewed him. You could look back in YouTube. Back in 2008, 7, 9, I interviewed Curtis, way back then. So if you want more information about Curtis Faith, you look it up. There's a lot of information out there on him. My favorite, though, Bob, is always Pitbull, Marty Schwartz, Buzzy, the King. And here's the thing. I like stories about traders, like how they got into it, what they do, how they look at markets. I don't really care too much about the Jeff Cooper. I don't get too hung up in the mechanics of technical analysis. And I also don't get too caught up in the mechanics of market profile and order flow, right? I think with anything, you can be too rigid. And if you're too rigid in your trading, you're going to lose opportunities because you're looking for the perfect setup, which really doesn't happen. So I think it's more a matter of reading those types, again, the Steidl-Meyer book on markets and the Dalton books are great, but don't get lost in the minutia of the technical part of order flow, market profile, or any type of technical indicators that Jeff Cooper may use. Just don't get lost in it. Right?
Well, here's my analysis of it too. Is you need to find the methodology that makes most sense to you, that makes you the most disciplined trader, that fine-tunes your ability to define risk and reward. And it's different for every trader.
Yes.
I have the Robert Heffernan trading system, and it's pieces of a bunch of different stuff, but it's my trading system. And you have your trading system. And I can teach you when we continue to talk about the ways that we think about trades and trade setups and markets. But it's got to make sense to you. So if you look at a market profile chart and it looks like gibberish to you, well, don't try to be a market profile trader. If you look at pattern recognition on candles and it makes sense to you, be a candlestick trader. It's pretty simple. And then evolve your trade around the idea of risk and reward.
And one of our viewers here popped in, and Warren said, another book that he likes, and I always like to recommend because I haven't read this one. It's Spread Trading by Schap, S-C-H-A-P. There you go. I haven't read that book. I'm sure it's interesting. And again, that's a little bit less risky, right? We're not talking pure momentum. We're not talking one side of the market. And most traders, by the way, most real traders, you're not trading naked long or naked short usually. You're or if you are, you have a very defined risk associated with that trade. So most spread traders, and there's very successful spread traders, just are trading for kind of, again, what we're talking about here, which is the meat of the move. I tend to think it's going to stay within this range. So there's ways to put on trades, and the spread trading is a great way for people who aren't or don't want to be sitting in front of a screen and locked into momentum moves up or down or no moves sideways, right? So there's a lot of spread type opportunities that are much easier, and they're just consistent. You can just consistently pull money out of the market without having to do a heck of a lot and have to risk a heck of a lot. You can back.
Sure. I mean, the spreads and spread margining are different, especially calendar spreads.
Yep.
You're looking at less volatility. You're trying to capture. You know what? From my standpoint, though, the spread trading, you can do the same technical analysis and market profile analysis on the pair.
Yes.
I think that's important, that everything that you learn on outrights, you can apply to spreads. And I never forget hearing a guy say, you can't do technical analysis on a spread. And I'm like, yeah, okay. Good luck selling insurance when they close the floor. Anyway,
here's what I have to say about all these methods and books. There is no holy grail. There's no absolute, nothing, just because, the Reddit boys are having fun today. They may have fun and they have been having fun for 5 years in a one-way market. You get to a two-way market, I guarantee you most of these people will drop away. They'll drop away. Right. Yeah. And another book I just thought about, if you want to read, an options book is, who's got the Bible on options? Yeah, McMillan. Thank you. I was just options.
Yeah, we get a pop in just like that, just when you need it.
Options as a Strategic Investment by Larry McMillan, who you may not know. I've met him a few times in Chicago, actually, Bob, with my former partner Jeff, who worked for Jeff worked at O'Connor. These guys were all spread kings and did very quant driven, and that's a great book. And then also another great book on option. Like if you want to educate, truly, be a trader, I would recommend both McMillan's book. And I would recommend Sheldon Nattenberg's book, which is always used in most finance classes and MBA classes, Option Volatility and Pricing. So if you really
I gotta tell you something.
If you give me an option, if you want to understand, you need to understand the math. If you really want to be successful.
I get it, and I have a fairly good understanding of how it works. I am telling you right now that if you put an options book in my hand, it's better than a Quaalude, because I will be asleep so fucking fast.
Listen.
I talk about dry reading. Go. Yeah. If you have insomnia, pick up an options book. That's all I'm saying.
Totally.
The other thing that I did it by hand, point and figure charts, as a phone clerk on the side of the pit. And it's amazing. I couldn't believe this. I just got this in the mail. They found me. Technical analysis of stocks and commodities, right? My green screen is messing with it. And so I'm on their mailing list that they found me, because I haven't been a subscriber for at least a decade, but I was a subscriber. And so I, things like this that can continue, especially if you're beginning. You need to be exposed to a lot of shit to figure out what makes sense to you, right? Like, you know what I mean? Because not all of it does, No. Anyway.
And again, it has, not only what makes sense to you, but what time frame and what risk parameters do you have in the trading that you have? Do you want,
are you what leverage?
What leverage? What kind of money do you have? What kind of noose do you have to hang yourself? If you're playing with $5,000, you probably can do one or two things, and you have to do it really well and be perfect almost. So get capitalized before you step into this game, and find the one that works for your time frame and your risk. Your risk parameters. Those are the things that you think about. This stuff before you trade, not how much money you're going to make. And you have, literally, and you have to like this, because it's a game. It's nothing but a game. What's happening with, the Reddit bros this week it's a freaking part of the game. And if you don't like all the noise and the clapping and the negativity, positivity, just ambiguity again around this subject this week is nothing new. It's new only if you're unaware of the game. It's a game. Trading is a game. Stocks never, ever trade really to the fundamentals. They're always either going away from it or coming back to it. So it's very rare. That's why I never understood value investing, quite honestly, because.
Well, even Kramer often says that, I love this story. And, I've heard him say it on several occasions, I could have done better on my entrance, or I could have done better on my exit. I should have paid more attention to the technical analysis or the order flow or whatever else he's looking at.
Mhm.
Important point here. Sometimes it's, as Warren said, how do I survive to initiate my next trade?
Right.
And again, leverage, all these things are so important, Matt. I wanted to, let's check this out, Matt. I don't have the background. I don't have the background music yet to this graphic, but this is our segment, Crypto After Dark. We talk crypto. You can join and trade some of the coins at OK Coin. And I wanted to just, you mentioned this before. And of course I can't find it because it should be there. But the Dogecoin thing, the price discovery is just freaking ridiculous. Let's not talk about that though. Let's talk about Bitcoin. And I got a good fake out here, and that's fine. Because overall, I'm still sticking with this idea. And this is the SPOOs. This is the 3-day. My idea is this, that in the next week or so, I don't see how Bitcoin goes to the moon if the stock market takes a crap. At some point, I think it comes back to all assets are the same, especially in a strong downdraft. So the SPOOs, we know what the SPOOs look like. On the Bitcoin side of things, and let's go to the 610, because this thing it's had a $4,000 break now.
Yeah.
In the last, and I got faked out.
Yep.
I jumped in here last night around 3,300. This candle here opened up, rallied a little bit, couldn't make a new high, and then was red when I went to bed. And I thought to myself, I'm not taking it the way that looks. I'm not taking that home, so to speak, or going to bed with that position. I wake up, it's on the moon, all right, and that's fine. So I missed out. The important thing is, and you can bring this up next, and you shared it inside the group on that monthly profile, and no new prices. And so again, I'm saying that I don't see how this goes to new highs.
Yeah.
With the correlation.
No, this was, I mean, I was looking for this bump to sell. 37.30. It went up to 38.7 last night, Bob, and I was like, thank you. This is the sell area again.
Share your chart with that longer term profile in it, because it's something, that was the momentum modeling on the 10-hour 610-minute chart.
Again, we've been locked. This is January 1 right here. We had not broken out yet over 30,000. Once we turned the calendar, we had that rally up to 42,000. So we went 29.42. Since then, we made the new low there at 30. We made another one at 28.5, and then we did the third low here in between those two lows. The thing that's still important here is brackets are always important. Brackets and brackets and brackets. There, as we talk about, there's trending up, trending down, and then there's brackets. We've been in a bracket now for the month, and this still is not resolved. And again, just because it ticks below and it's done it 3 times doesn't mean to me that doesn't mean to get short. Until you close under these levels, and we haven't closed closed it below yet, which again, somewhere below 30,000, give me a day, give me 2 days, I start getting a little bit more excited. I'll look for a rally back to this breakdown line to sell, or sell a little bit. And again, once it comes back to that line, here's what's interesting. Our kind of point of control on this time period is right here, right around 32,000. We're trading 34, let's call it 35 right now. But that's, as you said, that's come off $5,000 Bitcoin. If you're not trading Bitcoin right now, you have to be trading it when you're in a bracket, I guess is my point. When you're in a bracket, you have to be really careful. I mean, first of all, you get a move from, like we just had, from 29 to 38, Bob, you should be taking profits. That's not normal in any asset class to go up 33% in 2.5 days. So don't be greedy pigs again, right?
Absolutely.
this is what you were talking about with Kramer. This is where you can use the technicals. So maybe you don't get out at 38.7 and you were lucky enough to buy it down here, using these lines at 30,000. Well, that's okay. When it broke here at 37, maybe that's your exit point right here when it turns red there. Don't wait until it's 35 and lose another $2,000. I mean, you can, but it's not. I can tell you this shape is the wave is going down now. So until it's, you could maybe wait and get a bounce, but I wouldn't do that is all I'm saying. So there's times to be long, and this is not right now, not a time to be long after you've had a 33%.
Yeah, I mean, that's a complete failure to me. And, I was just looking to clip a coupon on the long. I wasn't looking for a long term. And I got out, and it went to where I would have got out with the profit. And that's okay. You live to learn another day. Again, are you going to be at the con? Can you watch it? Because when things rally 30% in 2 days, they can break just as easily in this market setup. So you got to be cognizant of that. And I just think longer term here, if there's some turmoil in the stock market and we get a good shakeout, I don't see how Bitcoin, just explodes as people run for cover on all assets, because that's generally what people do.
Hey, so I've got a little note here, and everybody, traders, especially equity traders, should be familiar with Citron Research. They've been around now 15, 20 years. I think Cuban was involved in funding this. They basically did research on companies that were pieces of shit and they've been doing this forever. And they come out monthly, twice a month. They have subscription models, etc. They are coming out today because they were obviously, anti-bras in the Reddits. And they basically probably got their asses handed to them by saying be short, whether it was AMC, GME, I don't know specifically. I haven't followed this, because what happens, these become crowded trades, right? Everybody subscribes to it. There's really no benefit anymore. It's like watching, what's his name on CNBC, that Gartman, you watch the Gartman letter. It's like, there's no value in it because everybody's just, they take the other side.
All information is equal.
Well, no, but what happens is people end up playing the other side. They did it with Creamerica. They're going to do it with the bras. I can tell you, I followed the bras for a long time because it gives me great short ideas, because they run the shit up and I know how to trade. I don't need to tell anybody about it. I'll just say, thank you for the run up, and I'll take my money again from you fools that want to.
What are you saying about this professional shorting? Do you think he's succumbing to pressure here to get out of this because the PR is so bad that we're not going to do shorting anymore?
I do think that's absolutely I'm sure they're sued all the time by the companies they smear, and I'm sure it's not a fun business to be in. I'm sure they provide some value, but here's all I'm going to say about this. This should be a warning to you traders. Now is not the time to get long because he's closing his short fund. You didn't win. Now is the time to get short because you got him to puke.
Yeah.
So it's
not quite intuitive, right, Matt?
It's not intuitive, but this is the game. I'm teaching you a little of the bravado that I've learned. When stuff like this hits the headlines, this is a time to say, whoa, this market is close to a top. This guy got squeezed out at the wrong time. Too bad. He probably didn't get squeezed out, but you understand. He's not going to be in this business anymore. And this is probably a time that you better sharpen up your trading two-way skills, because it's not all roses and chocolates right now in this market, as we talked about earlier in the show.
Yeah, ifs and nuts and candy and nuts. Ifs and buts were candy and nuts. Yeah.
Also, just a note, I don't know if you've noticed this, Bob, but a couple other real companies, and I'll bring up one, but nobody's talking about Apple down 10%. They're not talking about Google. But why aren't they talking about, Boeing also? Right? All the bras were happy about that a while ago. And that peaked in December. And that's gone from 244 down to 194, Bob. That's a 20%. That's bear market territory in a hugely traded, huge volume, $110 billion market cap company, right? So they've lost 25%. So you do the reverse math, it was somewhere around 130 billion. So if you don't think this can happen to the GameStops, which are truly, teetering as it is, you're wrong. The
And that is
excitement.
the
The
longer
only
term
the only
profile.
thing the only thing that keeps momentum going in a momentum name is more bag holders, more.
Exactly. It's classically the pet rock,
I
You need
tweeted
more people.
out the other day. Does GameStop go bankrupt in the next 6 months or 6 to 12 months? That was my tweet. Listen, if you have time, guess who wins in these? If I can sell GameStop at 500 or $2, and I'm a big player, which one do I want to sell?
Right, exactly.
I
And
want to sell
again,
500. Because there's a lot more money to be made selling $500 stock than there is a $2 stock. And this is what I talked about. This is what I talked about.
The chart that shows the overnight action is so crystal clear that the game is being fought amongst bigger money players.
Well, let's look at it again today. I talked about this early in the marketvitals.io, in our group today. These pewter areas are all overnight. Those are all when the highs were seen. All right. And other than that, we're red again today. We opened right here at 380. So we gapped up from the 19. So the headlines read, Reddit bras are back. We're up 100%. Well, nothing happened. Look at how nothing traded here. All they did is take out anybody who was short. They made them buy here at the high of the day, Bob.
Overnight.
Yes, but this is what they do. They take them out right here. They shoot them. And then all the bras now that are back buying, they can buy today. Oh boy, they should learn how to sell. Because if they were selling, they'd be making money. Fuckers.
Yes.
This is what, I can't explain. So stop reading headlines. You 21-year-old boys that are chasing this stuff, thinking you understand what's going on. The market it's been red. It was red yesterday. It's red again today. It was red Wednesday. It was up Tuesday. Okay. Tuesday was the kind of the coordinated, we went from 90 to, 150 at the close. That was definitely where it started. But that was the only day this week that we were up during intraday actual trading. Everything else has been sellers winning. So all you that are complaining to Robinhood that you wanted to buy, you've lost money every time you've bought this week. It's as simple as that.
Quit confusing people with the facts. Just stop. All right, let me share, because before we go, I want to talk about something that's been our radar, something that I have on, and that's the wheat. Moonshot here a bit, 2.5%. But I wanted to point out the nuance again of potentiality and the monthly chart. And right now we're rolling the month, right? Monday's going to be February. We'll get a new we'll get a new candle starting. And we went and pinged the collar on the monthly to the tick. I bet it wasn't to the tick in real time, but as you pull back, that band comes back down. Again, nuance. 694. My point here, though, is as we roll the month, you got about so it was 694 here the month before that. Let's do some math, Matt. 654. So a 40-cent slope here on potentiality in the wheat on the monthly, giving us room out next month, February. Let's do some math, right? 734. So that's what as one fractal leads into another, this is the analysis that I do as a momentum trader. What's the momentum level and what's the potentiality based on those collar levels? And when lines start sloping, you're getting slope, you're getting more potentiality in the market. And by the way, the only way that happens is whatever time fractal that you're on, you put in green or red candles. You start making higher highs or lower lows, and that's how the potentiality expands. Again, back to the pet rock, if there's not a bunch of more people that want to buy or secure or hedge their wheat for whatever reason at higher prices, the price can't go higher, right? The price can't go higher unless offers are lifted and you expose prices that are higher. Anyway, I just wanted to show that because we've been talking grains, we've been talking food for months now at marketvitals.io, and it's been paying for some lift tickets for sure, Matt.
Hey, next week we're going to have Tracy on from Shagirl. She's going to come on. We're going to talk all things energy. So we look forward to seeing Tracy. We've got a few other people that we've got lined up coming on. we're going to be having, more traders giving us their honest input and what they see in the markets, because it's always good. The thing about especially floor trading is you had that community. And what is missing as screen traders, and I've always been a screen trader, and the one great thing about Twitter, at least in the old days when it was a helpful community, was, you had this community where you could throw out ideas. Silicon Investor was a good one. I'm sure there might be some, as far as the Reddit bros, I don't spend much time there because it's literally like a shitty, gross bulletin board of like Dungeness crabs now. Like there's nothing.
Yeah, I know. When everything's a pump and dump.
Yeah.
And
so like that, and I'm sure that happened at some point, in the late 90s to Silicon Investor, and that's what killed it. So it's over. This is why I tweeted this yesterday also, whether it's Silicon Investor from 95 to 2001, Jim Cramer from 05 to 10, 12, that was his peak time, when everybody was watching Mad Money to get the, whatever was popping, because traders understand, you give me that volatility, I can sell it, right? I'll sell it, boom, because I know after he's done talking about it, people disappear. The Reddit thing stays a little longer because they keep pumping, but
here's the other thing too, is
once these people start losing their money from the pump and the dumps that don't work anymore, it's over. And so they're all the same. All this stuff, all this noise and all this media attention is just because they have nothing else to talk about. They're tired of talking about 40 executive orders and listening to a press secretary who says, I'll have to get back to you because I don't know anything.
And next week we're talking favorite ice cream. Yeah, some hard-hitting news.
And are you going to paint the plane? Are you going to paint
right
it?
on?
Oh, yeah. I'm glad you asked that question, because yes, we are. We're going to waste some more money.
All right, Matt, thank you so much. Have a great weekend. Listen, please join us at marketvolatils.io. We are a growing community of traders looking for actionable and accountability with honest dialogue around risk and reward. That's what we do. We're going to stick to that, Matt. Really appreciate your time today. And please reach out, marketvitals.io. Subscribe. It's free. There was a great commodity trader, order filler, back in the day, and he'd be working an order and it'd be a retail order, right? And he would say, come on, 47 on one, new guy. Let's let him in. We'll fuck him on the way out. That's just honestly the shit that went on. Come on, let him in. We got new guy here, new guy. So all you Reddit traders, if you don't
think
it's
a pros game, it's a pros game, and I'm a very small pro. So yeah, all you Reddit pros, appreciate the luck that you may have received during a bull market, and take your money.
The other one that it reminded me of, the trading is a lot like Joe Pesci when they go through the drive-through, right? You get fucked when you go through the drive-through. You never go through the drive-through. They fucked me again on my, and that's trading. So welcome all you Redditors to the world of trading. You can,
and Bobby, as we go out, and I'm going to tell everybody, we had a little conversation that we've both been riding a short in the spoos, and we both got out before the show started, and we were at 36.90. We did go a little lower, 36.85, but I suggested to you, we'll probably see a rally because we still have 2.5 hours into the end of the day. We're at 37.11. Again, be careful out there. Markets don't go one way forever. You can always cover. You can always get back in and take those profits, right? Or just by doing that, Bob, you can sell 25 points higher already. So,
exactly.
Congratulations.
And I had the thing that and again, this is why you need dialogue with people, because sometimes, it's a complicated game. And I told you I had the puts on that expire on Monday. And he's like, well, if you don't get out now, even if it breaks, they're going to crush the value of that because there's no time left in it.
Yeah, the decay is going to kill you.
Decay is going to kill you. So
especially
out,
again,
probably rally anyway.
This is why people need to understand how options work, and that is why they need to spend time with those boring books to be educated how that works. It is not because everything goes up all the time. They don't go up all the time.
Right.
It's just.
All right, Matt, thank you so much. And enjoy the weekend. Hey, you trade for a reason. Please get out there and have some fun. Enjoy your life, for God's sakes. All right. Spread a little love.
Spread a little love in the land.
Right on. All right, Matt, take it easy.
Peace, Bob.